Hey, how's it going, everybody? Mike Weber here, your South Bay and Los Angeles real estate broker, here with your real estate market update for the beginning of July 2021. Hard to believe we are already halfway through the year. A little behind on getting this video out because of the long holiday weekend, but certainly some interesting things happening in the real estate market. In general, we're still seeing kind of the similar environment that we've been in for several months now, which is, of course, a very, very strong seller's market. Prices still rising very quickly, inventory being severely limited, and really kind of the same sort of stuff coming out of the Federal Reserve and the government in terms of how they're trying to continuously support the market. Now, we did initially think that we were going to see the eviction moratorium roll off at the end of last month. And then, of course, I believe Newsom came in and extended that, I believe, until the end of September. So once again, a lot of that inventory that we would have probably started to see start coming on the market as some of those people were evicted out of those properties. We're not going to again see that for at least a couple months. I've heard there's a big backlog at the courts as well. So it might even take another 6 months or a year before some of those properties free up for sale. Now, we're also expecting to see the ending of the mandatory forbearance on government-backed loans. And that's a thing that really should start to create some more inventory for the market as we move forward, in the next months, year and a half, whatever the case may be. So we'll have to kind of keep an eye on that. Now, another thing that is kind of on the horizon is the Federal Reserve had been being extremely, unimaginably dovish throughout the whole coronavirus crisis or pandemic. And just recently, some of the people at the Federal Reserve have started to at least talking about the idea of possibly tapering asset purchases and potentially raising rates in the future. Now, obviously, it's unlikely that they're going to take any of these actions anytime soon. But that said, just the thought of them possibly doing it at some point in the future can certainly have a drastic effect, both on the real estate market and other markets like the stock market. So we're going to have to watch that and see if that's just talk and if anything serious will happen anytime in the near future. My sense is if that doesn't happen, which I don't believe there's any chance of it happening anytime this year, or most likely probably at all next year either. So assuming that doesn't happen, I'd imagine we're going to continue seeing the same kind of market that we've been experiencing really since the coronavirus pandemic started. We'll have to see how it ends up playing out. So anyways, let's go ahead and jump into the data. We'll start out by looking at what's happening in Los Angeles County as a whole, and then we'll take a look at what's happening in the South Bay beach cities, more specifically where I actually live myself. All right, so getting started here in Los Angeles County, we see that median prices are up 25.8% year over year. So it's almost mind-bending to see this kind of continued growth. And when we look back at the chart, we had very, decent price gains year after year after year. And then all of a sudden, right around when the coronavirus pandemic hit, inventory shrunk to a minimum because of aforementioned reasons. And all of a sudden, we just saw this huge skyrocketing of prices all the way to the beginning of this year. And then right around the beginning of this year, prices have just gone stratospheric, and they show no signs of abating anytime soon. So it's hard to believe that the prices just keep rising and rising and rising and so quickly. But this is definitely the environment that we're in. In fact, I noticed that the 10-year Treasury rate trended down to around 1.3% just recently. That has a direct effect on mortgage rates. So at least in the short run, we might even see mortgage rates start to come down a little bit. Now, I do get the sense that this is probably going to be pretty short-lived. I see the 10-year Treasury rate and just government debt in general, the rate on that continuing to rise in the future because of all this inflation. But at least in the short run, this could create another boost in the housing market, cause rates to go down, and cause people to be able to even spend more money to purchase a home. Now, if we look at the supply of inventory in Los Angeles County, we notice that we're down 42% compared to a year ago. Now, this is, pretty extreme sort of low levels of inventory. As you can see, I mean, we're off the chart, not in a positive way, but in a negative way, meaning we just have absolutely no inventory on the market. You go back all these previous years, and even at the lowest point of the season during the holidays in December, you see here that we were always at a much higher inventory level than we are right now in peak selling season at the end of June. So, like I said earlier, there's a lot of ways the government has intervened and stopped a lot of inventory that should have been coming on the market that we didn't see. But I would imagine unless those policies continue gradually over the next 3 months, 6 months, a year and a half, we'll start to see those inventory levels start to pick up. And it's possible that we'll see just a flattening, a smoothing out of these price increases, or if for some reason we're surprised and rates continue to move up and or more sellers decide to start taking advantage of this perfect storm of a seller's market, then of course we could see things start to move in the other direction. But certainly with what I'm seeing now, it doesn't seem likely to happen anytime soon. Now, if we look at closed sales for Los Angeles County as a whole, we see we're up 64.6% compared to a year ago. That makes sense. We were obviously kind of in a lockdown period, so not a lot was happening. And since there's no inventory at all on the market, what that's telling us is that anything that's really getting listed is being bought up pretty quickly. Of course, assuming that it's priced, reasonably and the property is available to be sold without, tenants that aren't paying rent or tenants that won't leave or something along those lines. Now, if we take a look at the South Bay beach cities, just to kind of compare and contrast how that looks compared to Los Angeles County as a whole, we see same thing, almost the same trend. We're up 26% year over year in median home prices. So again, massive, incredible home price growth in the South Bay. If we look at the supply of inventory, same exact thing. We're down to 1.6 months, down 40% compared to a year ago. And we're in peak selling season, and there's absolutely no inventory to speak of. So again, it's going to be a very difficult market as a buyer out there and a fantastic market if you're a seller looking to cash out, move out of state, downsize, take advantage of this market, etc. Now, for some reason, my closed sales is not coming up for the South Bay, but I did look at it earlier and it's very similar to what we're seeing in Los Angeles as a whole. So I hope this information was useful. If I can help you with anything related to buying a property in the Los Angeles area, we have all kinds of techniques and strategies that we're using to help our buyers get into a home much more quickly and efficiently than what you would typically expect or what the average agent is able to do out there. If you're thinking about selling your property, you want to make sure that you maximize the final sales price. Definitely reach out to me. Let me know. I'm happy to help. And then finally, if you want to look at all homes on the MLS, an immediate feed that's updated constantly, check out our website, southbayonsale.com. If you haven't already, go ahead and subscribe. Give us a thumbs up. Appreciate you guys watching, and I'll see you on the next video. Take care.